revenue is inconsistent. The stock is extremely volatile, often spiking or crashing on little news, classic pump and dump territory. Investing in Chinese stocks brings extra risks, regulatory crackdowns, lack of transparency, and complex corporate structures. CPOP uses a VE structure, so you don't actually own the underlying business. Competition is fierce, with giants like Tencent and Alibaba dominating. CPOP's small size makes it hard to compete or scale profitably. The wild price swings are a major red flag. This isn't a long-term investment, it's speculation at best. The risks of market manipulation and regulatory uncertainty are just too high. Chasing hype here is a recipe for losses. For me, CPOP is a hard avoid. Too many red flags, not enough substance. If you're tempted by the volatility, remember, you're more likely to get burned. There are better ways to play the entertainment sector. Skip this one. Next up is Verifyme, ticker VRME, a company that's carving out a niche in the anti-counterfeiting technology space for brands and manufacturers worldwide. Their mission is to help companies protect their products and reputations from the growing threat of fakes and fraud. Their solutions are pretty innovative, ranging from invisible inks and secure QR codes to advanced supply chain tracking, addressing a real, rapidly growing problem for global brands and consumers alike. The market opportunity is massive, but Verifyme is still a small player, up against industry giants like 3M and Avery Dennison, who have far more resources and established client bases. They've managed to secure some promising partnerships, especially in fast-growing sectors like cannabis and apparel, but consistent profitability remains elusive for now. Revenue is ticking upward, but it's still coming off a small base, and the company continues to post significant losses quarter after quarter. Like many early-stage tech firms, they may need to raise more capital to fund growth, which could mean dilution for current shareholders. The big question is whether they can scale quickly enough and land major clients before the larger, better-funded competitors squeeze them out of the market. The sales cycle for their solutions is long, and adoption by big brands tends to be slow, which adds to the challenge. It's definitely a speculative play, more grounded than some ultra-high-risk stocks like CPOP, but still not for the faint of heart. If management can execute and finally show a clear path to profitability, there's real upside potential here for patient investors. For now, though, it's best viewed as a watch-list candidate rather than a buy. Only consider investing if you have a high-risk tolerance and a strong belief in the management's vision and ability to execute. It's wise to wait for clearer signs of business acceleration and evidence that they can win larger contracts. The underlying idea is solid, but as always, execution is everything in this space. Don't get swept up by the story alone.